Hey, it's Ken, and we are back with another Monday Mortgage Update video. I have got Laura Witt, our mortgage specialist, with us here today. How you doing, Laura?
Hey, good, thank you. How are you?
I'm doing well, thank you. I'm doing well. Well, look, there is a program that has been speculated for like a long time. Back into March and April of this year, the government has been talking about helping first-time home buyers and people get into the marketplace, making homes more affordable. And part of that is this new first-time homebuyers program that effectively came in at the beginning of this month. We're here to talk about it. So why don't you break down sort of the logistics of this program, who it helps and what it does?
Yeah, so let's start out with, I guess, who it helps. It is a nationwide program, so any province is eligible. It is geared towards first-time home buyers. So if you haven't been on title in 4 years, or if you maybe have been, but you've been part of a common law or marital breakdown, you do qualify again. So there's some exclusions to that, but let's just call them first-time home buyers. And household income, regardless of if that's yourself as a solo purchaser or purchasing with someone else, cannot exceed $120,000 per year. So if you earn more than that, unfortunately, you're excluded from the program.
Okay. So 120 grand. What's the max cost of the house? And then maybe some of the terms that are involved with that.
Yeah. So as far as what the $120,000, let's use that as an example, will restrict you to or allow you to purchase. At any income level, it's 4 times your income is the max mortgage amount, which also includes the CMHC premium. So this is a default insurer, CMHC, Genworth, Canada Guarantee, whatever program. So it is for a high ratio. You must have a minimum of 5% down, and then no more than 4 times your income for the mortgage. So if you're looking at that 120, that'd be $480,000 as a max mortgage, which limits or allows you to purchase, should watch what I'm saying, depending on what market we're in, about $565,000 as a max purchase price with this program.
Okay. And I mean, we're really talking about the local GTA here in Ontario. So if someone purchases a house, maxed out all the parameters, $560 is the purchase price. Maybe walk us down just a quick scenario of how that looks, the money they're going to get from the government, and go from there.
So the government, it really depends on the dwelling. If it's something that's existing that you're purchasing, the government will give you 5% as a down payment. And if it's for a new build, it is 10% of the down payment. So the pros of that, of course, is if you have higher down payment, you'll have a lower mortgage, which will increase your cash flow every month because your mortgage payment's less. So that's great. It's an interest-free loan, and you're actually not making any payments towards that until the 25-year amortization is up, or until you sell your home.
Or refinance it.
Yeah, exactly. If you refinance it as well, the government's looking to get their cut back. So the way it works, though, is it's actually a shared equity. So if the government's given you 10% on a new construction and you purchase it for $500,000, we're looking at $50,000. When you sell it, a couple years, say it's worth $700,000, the government still wants their 10% back. So now that jumps up to $70,000 that you're paying them back.
Okay, so if they give you 10% for a new build, when you sell the property, they want 10% of the final sale price. And Correct. Then if you get 5%, you're purchasing a resale, they want 5% of the purchase price.
Exactly.
On the sale, on the when you go to sell it. Okay, so let's break down some of the positives. So you have all the maxed out parameters, 560. The government's giving you the 5%. And you've got all your CMHC, all your costs. What are you saving if you go with this program on a monthly basis? And these numbers are all approximate.
So on the max end, assuming you earn $120,000, it's going to save you about $200 a month as far as the monthly payment on your mortgage is concerned.
Okay, so instead of spending, let's say $2,500, you'd be spending $2,300.
That's right.
Okay, and what other are there any other positives for this program that you foresee? Do you think this is really viable in the GTA?
Unfortunately, I don't think it's viable in the GTA. I mean, the average home price in July in the GTA was $826,000. So if your max purchase price using this incentive is $560,000, you're not buying in the GTA.
It's about $300,000 off.
Correct. Yes.
So this program is more designed for people that might be outside the GTA, the Niagara region potentially, even though that market's creeping up, the Barrie market, even though that market's creeping up. We're talking like almost remote places where this program is really applicable.
For a detached, yes. I mean, there may still be some condos which are, available for this program as well that are under that 560 threshold, and then it would be applicable to it. The interesting thing about this program, though, is it was kind of designed to help more first-time homebuyers get into the market. However, I'm going to say it does restrict their purchasing power. So it limits them to 4 times the amount of their income, or $480,000. If you had $120,000 in income that you were looking to just go into your bank or come to me looking for a purchase, the bank would probably approve you for closer to $580,000 using that income. So it does restrict your purchasing power quite a bit.
Yeah, no, for sure. And I guess it really depends on how people's ratios are. If they don't have that much to put down, they're falling into CMHC stuff. There's a huge variable, obviously, with every single person. But I guess the program has its place with a small amount of people. And this kind of was reflective in BC, right? The government rolled this out a couple of years ago. How many people ended up really using this program over a couple of years?
Yeah, so BC rolled out a similar program where it's an equity stake in 2016. They had hoped or had aimed for about 42,000 people to take advantage of it. And the take rate was only 3,000. So they actually took that off the table last year. Now, this being a national priority, I mean, they're hoping to get 100,000 over the next 3 years, but it'll be interesting to see really what markets benefit from this. I surely don't think that the GTA or Greater Vancouver area will, but
and really that's because of the actual sale price of the house, right? Like majority of these houses and condos just aren't fitting within this criteria.
Exactly. Yep.
Right. Okay, well, look, I mean, it's going to be an interesting, conversation to have maybe 6 months or a year from now once we get some stats back. And really, who knows we've got an election in November. So if a different political party does take power, this program could get rolled back too. It's going to be interesting to sort of see the next, again, 6 months and really the real estate and mortgage landscape and how it's all going to unfold.
Absolutely. Yeah.
Awesome. Well, look, if you're thinking about making a purchase, if you are a first-time home buyer and you're really not sure where to start, reach out to both myself and Laura. Laura's got an amazing app. I'm going to put all of her contact info down below in the video, and reach out to her. Laura's got a wealth of experience when it comes to working with first-time home buyers and really with anybody for that matter. If you're an investor or you're looking to downsize and maybe pull some funds out, talk to Laura. She's got, again, a lot of experience in many different situations. If you're thinking about making a move, I'd love to sit down and have a chat with you. All my details will be below this video as well. We have something coming up tomorrow that we need to talk about. And if you watch this video maybe a couple weeks from now, it's already going to have happened. But what is happening September, I believe it's the 4th. What's happening?
It's the next Bank of Canada's opportunity to change the overnight lending rate, which really dictates prime and variable interest rates on the mortgage side. So typically we hear around 10 a.m. tomorrow morning on what that decision will be. Most experts are saying that it will stay the same, but we could be seeing a decrease before the end of the year yet. So be interesting to see when that comes exactly.
It will for sure, and we'll definitely jump on and give you some context and give you our opinions on whether it stays the same or it goes down, how it's going to affect you, the end consumer, when you're thinking about making that next move. Is there anything else you want to talk about?
about it. Just the rate announcement tomorrow is next big news, and we'll
see what
tackle
happens
that
with that
one tomorrow.
Awesome. Well, thanks for watching. This is a mortgage update for you. We try to get on every Monday and give you some insight and some context behind the news. Majority of it really isn't what you think it is. So if you're thinking about any kind of move in real estate and are a little bit nervous, or read the newspapers or listen to the radio, watch TV and go, hey, maybe I shouldn't, talk to us first. Let's have a conversation. Have an awesome Monday, and look forward to the rate announcement and our conversation about it. Have a great day, Laura.
Cheers. Thanks. You too.
All righty.